At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear!
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081-5171-7171. Alpha Morgan, growing your wealth.
Good morning, ladies and gentlemen, and distinguished guests. Let me use this opportunity to say congratulations to Alpha Morgan for the 10 years of success.
Thank you, sir.
We're happy to be associated with you. Like they say, success has many relatives. What they call failure is an orphan. So we like winners. We are allergic to losers. So let me start again by saying that I don't know that in March you would know there'll be a president-elect. I think that the crystal ball is showing us that there will be a runoff. And if the elections are in February 25th, the runoff takes place 4 weeks after that. Okay, so I think that all things being equal, by April 1, you will have a president-elect or April Fool with a president-select. So let's start from that point. But like you said, this is a year like no other. So we would say, quite frankly, it's a typical year. It's a difficult year, challenging year. And having said that, the theme of this discussion today is hope rising, or is the worst yet to come. Again, let me congratulate you for being one of the Africa's fastest growing companies recognized by the Financial Times. The day for the financial services industry is here in Nigeria, because Nigeria has always been a bank-based economy, but it's now moving to becoming a market-based and market-driven economy. And that means that the link between markets and the economy are the financial intermediaries, like your goods selves. So today we're going to be talking about 2023, or 2022, to all intents and purposes, is over. Some will say good riddance to bad rubbish. Some will say, take it as it is. It wasn't us alone. So what are we looking at here? One, we will use some of the guide from what we see. We think investors are confused and worried. They'll be confused is an understatement. I think investors are actually more than confused, they're bemused. Okay. Again, financial services industry is a cyclical industry. Okay. So what I mean, therefore, is that when there's a upswing in a cycle, when there's growth, financial services does well. When there's a downturn, the financial services industry suffers. So people who are looking for cyclical stocks to buy usually rush into financial services. Why is it that way? Because when there's a downturn in economic activity, corporate failures increase, default rates increase from banks, and banks have to write off a lot of things. So you cannot decouple the banking industry from the state of the industry or of the economy. While in some cases you think, when you say that defensive industries, for example, if there's construction, there's agriculture, no matter what happens, that sector kind of survives downturns. Another thing we do know is that the Russia-Ukraine war, which we thought would be a one open and shut case within 1 month, it started February, And now it looks as if it's going to last a little longer than that. It's already 11 months, as it were. The Russia and Ukraine conflict have been very, sorry, there's no S there. Russia-Ukraine conflict, it's one conflict, is disruptive, okay, to the industry, to industry profitability, okay? And the era of quantitative, not qualitative, sorry, era of quantitative tightening has heightened default risks. And so we'll correct this slide before they send it out. Okay. So what are the broad asset classes that people have invested in the last, I would say last decade, but more last year, since Alpha Morgan is 10 years old? They've invested heavily in gold. Gold has been there since we knew, since mankind. So gold, what has happened year to date, the price of gold has dropped by 1.71. There is an inverse relationship between the price of gold and the value of the dollar. So if you look at this year, the dollar has appreciated by as much as 17 to 21%. And therefore, I'm surprised at the price of gold. But the real rate of return of gold is 22%, which is almost the same equivalent as by how much the dollar has appreciated. So for us economists, we know that if the dollar appreciates, the price of gold, if the dollar depreciates, everybody goes to gold. Gold is a major fundamental store of value. The Standard & Poor's, which is the equity market, has dropped year to date 17%, but in real terms, almost 40%. Standard & Poor's is a wide, broad definition of total market. So it's Standard S&P 500, the 500 leading stocks in America. It cuts across every industry. So if you invested in the American economy, you would have lost 17.97%, even though your dollar has appreciated by the same amount. But also in real terms, when you had inflation and all of that, you lost about 39% in Nigeria. The Nigerian stock market, you've gained about 14%. In real terms, when you knock out headline inflation, you've lost about 7%. Real estate, you've gained about 14%. Depends on what segment, but I know that in some real estate, some hot markets, like Yaba and Abuja, you probably have made about almost 80%. And now you're going discount for inflation. If you've invested in Bitcoin, or in fact today, I think RTX or FTX or whatever it is, the guy has been arrested in the Bahamas. So it's a different story. So the cryptocurrency market has gone into total unravel. So you would have lost something like almost, I would say, about 80 or 90% of your money. So for those who are investors out there, all of us have something in this. So 2022 was a bad year, but 2021 was not so bad. 2020 was not so bad. 2019 was great. So if you've been investing the last decade, then you made money. It's only this year, but I think that this year, from now to the end of the year, there's some positive moves in the markets. The market gained significantly yesterday. And so it may not be as bad as the 39% you're reading in S&Ps. It probably end up with about 32, 33% negative. And then we start from there. And this becomes a buy opportunity. The rule of investment is that you buy low and sell high. Okay? Let the market, they say the trend must be your friend. Those are the sayings there. And Warren Buffett said, rule number one, he has 3 rules. Rule number one, if you're not ready to invest for there's not like investing for the short term. If you're investing for one day, you might as well invest for 10 years. Number 2, do not lose money. Rule number 2, do not lose money. Rule number 3, do not forget rule number 2. So that's what Warren Buffett, the biggest, the most successful investor in all times. So again, shocks in the energy market. The world revolves around energy. You must heat use energy for heating the homes. You must use energy to power your air conditioners. You must use energy to power your cars, power your trucks. You must use energy to power the aircraft. So everything in the world. Don't forget, the Industrial Revolution was based on coal, right? The discovery of coal as a fuel for energy. Coal moved on until it became oil. Oil moved on until it became gas and oil. And now we are talking about solar and other energies. So energy is the key to everything. So Russia and Ukraine happen to be one of the world's largest repositories and producers of energy commodities, energy-related commodities, oil, gas, and so on. So any conflict in that area disrupts the supply of energy resources, and that's what is happening. Okay, but the Russia-Ukraine war, the Russia-Ukraine conflict, is not. It's a conflict that involves many alliances. It involves us. It involves the entire world. So as we go to the end of the year and start next year, the question is, how long will this crisis last, and how long will the disruption to the price of oil? I think if I checked this morning, the price of Brent is at about $77 or $78 a barrel. How much? 79. Okay, so it went down as low as 77, but I guess what is happening here is that you know that the Chinese president is visiting Saudi Arabia. Saudi Arabia, there's a question of the oil cap. There's a question of, I just read somewhere now that Cameroon oil production dropped by over 45% because that's what's happening. So we think that the price of oil will stay in this range. But don't forget that about 3-4 months ago, oil got as high as $125 a barrel. So from its peak, 2022 of $125, $128 a barrel, to what it is about $80 a barrel, we are seeing here a $35 to $40 drop on the peak. The low of the year is in about $74, $75 a barrel. With the G7 countries' agreement on Russian oil price cap be another disaster? No. Okay, so well, one thing is clear. The major constituent of the consumer basket in the United States and most of the European countries is the price of petrol in the pump. If the price of oil drops, then the price of petrol in the pump, or what they call gasoline in the US, drops. Once the gasoline price drops in the US, then two things happen. One, the consumer price inflation declines, and two, and more importantly, is the fact that inflation expectations begin to drop. What we've seen in the last month or two is that headline inflation has dropped in the US. Producer price inflation, which is the cost push factor, the PPI has dropped. And what we've also noticed is that inflation expectations are beginning to show decline. Therefore, inflation psychology, which makes people buy more, hoard more, and all of that, and is beginning to change and shift in favor of the fact that inflation will decline. But will it decline fast enough to encourage the doves within the Federal Reserve Board Open Market Committee to begin to lower or slow the pace of interest rate hikes? That's the question in the minds of investors, and that is what concerns you, because you're all investors. The confluence between investment and analysis and economic analysis, what does that variable mean to investor sentiment and investor expectation? So another thing which is tied to the fact that energy prices are beginning to taper, but inflation expectations are lowering, but not fast enough to drive interest rate. But because the interest rate tool In other words, the Federal Open Market Committee is using one tool to fight two birds. Bird number one, cost of living crisis, inflation. Bird number two is using the interest rate move to deal with supply chain disruption and the excessive spending of the past year, that is fiscal overdrive. So, but the unintended consequences of these higher interest rates is that it slows growth and cause what we call a hard landing. In other words, you will have a recession, and if it's a deep recession, I'll call it a hard landing. If it's a mild recession, you can call it a soft landing. So what we are looking for is a soft landing, but what is true is that the world will go into a recession. Is a recession a kiss of death? No. But if it's a shallow recession, then believe me, you will get away with it. Okay. Yeah. Will there be inflationary pressure wrapping up as we go into 2023? The inflation, we think that inflation would have peaked and begin to taper. All right, so the EIU, or the economic economist, believes that a decline in short-term financial asset investment because of interest rates are increasing, your marginal propensity to consume begins to reduce, and at times it also leads indirectly at times to shortfall in loanable funds. But technically speaking, it increases your propensity to save. But again, what we've seen in the advanced economy is that people have been spending more than they earn. In other words, we've seen where the marginal propensity to consume will be more than one. In other words, you are spending income that you have not earned yet. You're spending in advance, and therefore you can have the savings, which means that your marginal propensity to consume will actually be negative. Well, how that happens, I really don't know, but it happens. Okay, so what are the things that are disturbing you? Investors don't like turbulence and volatility, because there's a volatility coefficient, an index to which you use to measure. And if you look at that, the higher that coefficient, the lower the confidence of investors. And in fact, that investors now fly to safety, which means they're going to buy gold or some other safe assets. There's a risk of debt distress in low-income countries, so that is including especially highly indebted low-income countries. So Nigeria falls partly into that category. Geopolitical tension, trade disruption, and food shortage. I think it's quite clear now that with the Democrats in charge of the Senate in the US, and the US economy beginning to look positive again, that the US hold or grip over the global economy remains very strong. And therefore, geopolitical tension, trade, and disruption will be. If you follow the papers, I think the Nigerian president is in Washington today with other African heads of state. What are they doing? The US is trying to engage Africa as a counter to Chinese initiatives, what they call the Road and Belt Initiative. So how will that discussion go? I'm not a fly on the wall. I can only speculate that discussion will go, look, gentlemen, the US is willing to support you. The US is insisting that you must have free and fair elections. The US is insisting that you must have free press. The US is insisting that we hate coups and so on. So then the guys will say, yes, thank you very much. Thank you very much for having us. We have infrastructure deficit. We need this. We need to have one African country on the permanent, what they call the United Nations Security Council. We need an African country on the G20. So those will be the discussion, and then it's okay. They'll set up a joint committee to look into it, and After that, they would take coffee and tea and biscuits and rice, and everybody goes back home. That's what is going to happen. Everybody come back home and face inflation, fuel shortage, and all the other things again. So China's zero COVID policy, I think China now knows that. But what is interesting though, I've read it everywhere, there's another surge in COVID in the advanced economies and advanced countries. Unfortunately, this is the time of the year when a lot of Nigerians abroad, visiting friends and relatives, are coming back home. And I suspect that we are going to have a major surge in COVID here because of visiting friends and relatives. So, and when will that happen? You will see a lot of that in January. So, I think that those of us who have we should go and take our vaccinations again, I think so. Okay, so the EIU says global business trends for 2023. What are those trends? One, inflation crisis will hurt retailers. Even e-commerce will grow too slow. Which means that if I read somewhere that Jumia's profits reported a loss, but what it does mean also is that you know that Amazon is laying off 100,000 people. You know that Alibaba is laying off. See what's happening here. So even if the shops are, people going to the shops are reduced, then people going online to buy things will also reduce. You can only buy with money you have. If you don't have money, you can't buy. So recession will affect us. How will it affect you? Because companies will fail. Recession means slow growth and corporate failure and high unemployment. So we think that will affect spending. iPhones was supposed to iPhone 15. Is it called iPhone 15? 14, right? 14 Pro Max. Sure, iPhone 14. It's 15 actually. It's 15. Okay, 14. Okay. So 14 has come out, but it's still production. But I think I heard somewhere that they're launching it. They are launching it. Okay. Now, what does that mean? It means that high-end spending this Christmas will be low. High-end spending next year will be affected by the income activity. Now, another thing is about artificial intelligence market. I heard this morning artificial intelligence prediction on the World Cup based on data is pointing. Artificial intelligence is saying that France will win the World Cup. Another score, artificial intelligence says that Croatia will win the World Cup. So in other words, the final will be between Croatia and France. That's what the artificial intelligence is saying. But emotional intelligence is saying that Messi needs, this is his last shot. Argentina has won this thing in 1978 and 1986. And 1978, they had Mario Kempes. In 1986, they had Diego Maradona. And this time they have Messi and a young man called Fernandez, the guy who plays for Benfica. So, and Alvarez, I think. So today's another game, we'll see the battle between artificial intelligence and emotional intelligence prediction. Automotive trade. Electric vehicles, the use of electric vehicles, I understand, and I read somewhere that the automotive new car sales will increase by only about 1% or so globally. However, in that 1%, there'll be 25% growth in electric vehicles. Okay. So if total new cars being produced this year in the world of 1 million cars, 250,000 of those cars will be electric. No, I don't know. That's not how it works. The growth in electric vehicles is will be 25%, while the growth in normal vehicles will be only 1%. In other words, you can't use the absolute numbers, right? So basically, if that continues in 2-3 years, there'll be no new normal cars, all of the cars. All right, so what they're saying is that if the rate of growth of all cars is 1%, and the rate of growth in the constituent and made up of electric vehicles is growing at 25%, and by next year, in fact, it will get stronger and stronger. A point will come when within 2-3 years, there'll be no new normal cars. All the new cars will be electric vehicles. Okay, so but what does that mean? It means something that BMW, Porsche, Mercedes, General Motors, and others are just beginning their journey into electric vehicles. And Tesla is beginning to lose market share. All right. So in your global investments, if you're buying defensive stocks, which are autos, you should be buying BMW. I think Porsche is the one that is coming out with the joint venture with Apple. So, and Apple has pushed back the electric vehicle initiative by another 2 years, I think. Information technology, recession risk and interest rate hikes. IT. Think about IT. IT always pushes what in economics we call the production possibility frontier. Every time that curve moves out, it increases productivity, but it also increases disruption, right? So the consequence of an increase in growth, which leads to more income inequality, you begin to trade off between the implications of having more money, but more poor people. Or not more people, let me take that back. The difference between the rich and the poor becomes wider. And that creates itself societal imbalance and distortion, and it heightens the anxiety and envy of the underprivileged, and that battle between the haves and the have-nots. So it's not a class in economic, in political science, but it's true that remember that IT, every time there's a new development in IT, all the people selling recharge cards thrown out of job, and they become armed robbers, become kidnappers, every time you do this. So we should hail IT, but we should also insist that the increased productivity should be used by government to do more construction jobs and all of that, move people out, and then retraining our people. So global price oil, so energy, we talked about automotive, energy industry, again, the shift from oil to gas to renewable energies will take place. IT will create, we talked about artificial intelligence, emotional intelligence, now the global oil price increase. So what next? Financial services, which affects you. One, rising interest rates will bolster margin, but also will lead to higher closure of businesses. Stock markets will tighten, and your standard cross-border payments will see the next shake-up, and so on and so forth. Telecoms, you know the effect of 5G already in Nigeria, spread of 5G, to middle-income countries. Again, every time there's a boost, there's a correlation between broadband penetration and productivity, but increase in productivity that displaces Africa has a lot of untrained manpower. And every time there's a technological boost, you're pushing out a lot of people into unemployment. The line between unemployment and crime is very thin. Okay, so that's another issue. But travel and tourism, airline industry, the big situation here is that we are going to be in 2023. We would have overtaken where we were in 2019. 1, 2, the shift from sea freight to air cargo. So in the aviation industry, there's tourism, there's business travel, there's also what you call business travel, tourism. There's what we call charter flights, and there's what we call cargo and logistics flights, UPS, DHL, and all of those. So what are we going to be seeing? We are going to be seeing also them going to hydrogen as a source of energy as against aviation fuel. So what to watch in 2023? 4 things here. One, recession looms. Well, is it going to be a shallow or deep recession? That's a big question. We think it's going to be a shallow recession. So there's no need to go into a panic. But for countries like Nigeria, there's a time lag between when there's a recession in the advanced economies, the slow demand for commodities and raw materials, and then the effect on us. Okay, so that it will come to us in 2024. When there's a recession, we'll move from financial instruments to other instruments. Okay. Trend number 2, silver lining climate. So the whole climate thing, again, how much of it is hoax? No, not hoax. How much of it is hype? I don't want to use hype. Hoax. There's hype, but I do know also that when push comes to shove, people started using coal when the Ukraine war. Everybody forgot about global warming. So again, renewable energy, solar and wind. What you must note is that every time we move to solar, every time we move to energy saving, every time we do this, we are actually moving the the demand curve inwards. There's a shift because those are structural changes to the demand pattern. If I was using 20 liters of petrol before a week, because I'm using a more fuel efficient vehicle, I'm now using 15 liters of petrol. If all of us are doing that, it's not just the reduction in the quantity demanded, there's a shift in the aggregate demand curve. And it is that more than anything else that leads to a recessionary impact more than anything else. A slowdown in the quantity demanded, increase in quantity, those are short-term phenomena. But once you have a structural shift, for example, if you use tractors and fertilizers and the yield per hectare goes from 4,000 tons to 8,000 tons, that is a shift in the aggregate supply curve. Okay, so enough of that. Shifting alliances, geopolitical curves, and all of that. Again, in geopolitics, we say there are no permanent friends and permanent interests. So the US tried to redefine its interests under Trump. Trump was seen as an agent of the Russians and all of that. But I think they're back to normal ways again. Trump has enough problems about his taxes, and between taxes and women, he has enough problems. China. China is the world's second largest economy. It's been very aggressive in both international relations and in economic impact. They've done a lot, but the Western alliances are quite aggressive now in taking on China, from COVID all the way to 5G, to intellectual espionage, which is the strongest threat, the biggest threat of China, intellectual espionage. I'll tell you a story. Many years ago, I was at a restaurant in Nigeria where with some international investors were talking, and that was a Chinese restaurant, and this guy was milling around. He was a waiter. He was serving us. Then somewhere in between, he asked me, because I was the only African there, all the others were. He asked me what I told my name. He said, so he gave me a card. In bringing out the card, it turned out to be a wrong card. And he said, no, but the same name. And he gave me the right card. The card he first gave to me had him as a senior vice president in Standard & Poor's. And the other card had him as a restaurant manager. And on that first card, he had a PhD in economics from Columbia. And so he said, oh, sorry for the card. I said, what is it? So after a while, I engaged him, and it turned out that he is a son of somebody who has a Shangri-La, some big restaurant chain all over the world. And he told me that their job, their responsibility was to go to schools in America to clone everything that was clonable and take it back home for them to upgrade. So there was intellectual espionage is the main goal. And he was hanging around there when he was hearing the discussion. And he was virtually cramming or recording everything that we were talking about. Right? And we played back and do whatever it is. Then I knew that even those Chinese taxi drivers you see in America, and all that, they're all part of it. Espionage ring. They're all highly trained, highly educated people with a mission. Right? So I'm just taking this about the next phase of the struggle between the West and the Eastern countries. Right? Taiwan, the same thing. Vietnam, those guys have spent fortunes on education and they are humble to the extent that guy was just milling around like a restaurant, serving soup and things and all that, but he was there for a mission. Okay. So the financial market players in days ahead, banks, insurance, fund managers, and all, you will see all of this is happening. And so it's time to start buying into those stocks. For developing countries, because I've spent a lot of time there, look for those countries that are signing deals with the IMF, i.e. Ghana. I think Zambia is signing one in another few days. Tanzania. All those countries that are having IMF programs, their Euro bonds are going to go through the roof. So if you have those bonds and you bought them the moment they have sign a deal with the IMF, London Club and all of that, the bond prices and everything, because there'll be a rescheduling. And so their debt default ratio drops and their debt sustainability ratios also improve. So you may want to buy into those things as well. In particular, we should be looking at the East African countries, Kenya, we look at. Ghana is like a basket case now, but I think once Ghana signs a deal, the next election is December 2024, so there's enough time. And in any case, I don't think Kofi Addo is going to be electable in the next time. So what do we have? This is what I call it here, the global corporate default. And again, sorry for the mistake again, I've corrected this many times. And the NPL rates, not NFL. So NFL is football league. So my apologies again. Capital markets will remain under pressure, and developing economies will have to proceed with a limited safety net, I think. Again. Digital disruption of domestic payments. The thing about digital payment system, it has nothing to do with advanced economies. I think we've seen that in many African countries are even more advanced in digital payments than the advanced economies. Because the advanced economies spend a lot of money on the infrastructure for current infrastructure. So, and it works. In other words, the clearinghouse in England or the clearinghouse in France for checks is very advanced, very efficient. You pay in a check, you get the value the next day. So the incentive to move to total cashless economy is not as high in those countries because even the cash economy is working efficiently. In other words, checks. I'll give you an example. Because their landlines were working, the mobile phone penetration in Europe and America is not as high as mobile phone penetration in Africa. Because in a country where Nigeria had about 50,000 or 100,000 landlines ago. So it was virgin territory for mobile phones. So, but if we had landlines that were working, you would still use both together. There was a time when you connect your landline to your laptop and all of that, if you had it working. So the disruption to the digital disruption and technology disruption is much more aggressive in those undeveloped countries than the highly developed countries. So global interest rates will increase and then begin. And you know what? When interest rates increase, the value of your stock market portfolio begins to decline. But if there's a soft landing, then you will have things done. So, again, it's like I said at the beginning, inflation begins to ease, but is it going to go from 9? What the U.S. Federal Open Reserve Committee wants to see is for it to go back to 2%. It went very quickly to 9, but it's now still at 7. So we don't think it gets to 9 until about 2024. Won't get there in 2023. Growth, again, I said recession, shallow recession, will be back in full growth again. But in sub-Saharan Africa, Nigeria, Kenya, and all that, inflation will still remain. Nigeria inflation will get to 22, 23%, then begin to come down to 17, 15 in 2 years' time. And then at that time, so what am I saying here? I'm saying that interest rates, if you look at 1 year interest rates about 14%, 13 point something, you will see interest rates for 5, 10 years in Nigeria going for 14, 15%. So inflation at that time would have come down to 11, 10%. Debt, like I said earlier, the debt pile is up, but all those debts will be restructured under new conditions, IMF, World Bank, London Club, Paris Club. So who are the usual suspects? This table should actually show you country and its level of, when we present to you again, show you the level of productivity in these countries. So if you have accumulated external debt and it has become used productively, then your total factor productivity should be higher. But if your debt level is high and your total factor productivity is low, it means that you have not. Total factor productivity measures the optimality of the use of capital stock in an economy. Okay, so when you see a situation where maybe South Africa has debt, 15% of debt, but it's and so many $1 billion, but its factor productivity is 4 or 5, that's good. But if Nigeria has $40 billion of debt and its total factor productivity is minus, then you have a problem. That means you've accumulated debt, consumed it, and have nothing to show for it. And you still need to borrow money to actually optimally utilize the capital stock. So will African countries face debt distress? Yes, almost all the countries are on the table. The most obvious one, I think, is Zambia. Zambia is at the cusp of something, but Zambia is interesting though. Because Zambia produces copper, produces cobalt. Those are the big things that are used for electric vehicles and the new. So I think Mozambique also has massive gas, and they produce what they call graphite. Graphite is what they use for making. It's another ingredient they use in making batteries, and especially batteries for electric vehicles. So if you look at Africa, interestingly, those that have the crude oil and gas are more in certain areas, but those that have the graphite, the columbide, and all of that, you now begin to look at Congo, look at Zambia, at all those countries. So does that mean there's a shift in influence in Africa? Does it mean that the countries of old who had gold and oil, who were also predominant, you could see if you look at even football, the big players in Europe that time were either Nigerians, Ghanaians. That was all. Today, where are they coming from? Ivory Coast, Cameroon, yeah. Right? Maybe now Morocco was, So there's also a correlation between economic success and soccer success as well. Okay, so another source to look at is where will money be coming from? So you say the Naira is weak, But Naira's weakness is a function of one, the price of oil and the production of oil and oil revenue. 2, the seamless flow of diaspora money coming into the country. If that flow is disrupted because of structural changes in the markets, the money will get in, but it will come in through an inefficient structure. And it will not be available to the central bank of the country to use to fund other productive activities. So in other words, in a bid to control the money going out of Nigeria, you are using that same thing is blocking the money coming into Nigeria. So I would liken it to a man who has nothing and is using all his money to build burglar proof. As a matter of fact, it will be in your interest for the thieves to come to the house and leave something when they are going from where they stole somewhere else than for you. So probably it's in your best interest to move the burglar proof. So these are remittances, and so because time is far gone. Population is a problem. Again, major issue. How does it affect investors? Not that much, but because you'll be investing in this country, but what the people that are here in this webinar are looking at, how does it affect my portfolio? So we'll skip that, but it's important. How does it affect my portfolio? The new market for everybody, Facebook, Amazon, everybody's coming to Africa. So you want to invest, MasterCard, Visa. So why are they coming? Because one, there's a huge market. Two, they are young. So if you capture their minds, since the median age is 18 or 17 plus, you have, and the life expectancy is 55. So you have 40 years of those children to invest in. So this is population and growth projection, but again, technology helps you. But technology helps you produce, but doesn't help you provide a safety net for those who are where the displacement and unemployment that is caused by it. So we're not going to bore you with all this population things here, but it doesn't affect your portfolio directly. Now, currencies, again, shifting global activity is critical. If you look at the trading partners of Nigeria, Ghana, and all these other countries, most of the trade is with Europe, Asia, and America. The thing about the African Continental Free Trade Agreement is going to increase, with the rules of origin, going to increase the trade between African countries. And since trade is a zero-sum game, if the more I buy from African countries, even if it's semi-manufactured goods, the less I buy from Europe and others. So the trade pattern, currency patterns will change. That will be the beginning, because when African countries start trading among themselves, and I can use my Naira to buy CDs, and you can use CDs to buy Naira. Right now, if I want to buy anything from Ghana, I have to go and buy US dollar to pay them money if they want to buy from me. So the colonial master is sitting down in New York, and you all come and buy your currency, come and take your currency to trade amongst yourself. Well, that will not come. The US knows that, and will continue to use its power to ensure that there's no other reserve currency. So, Nigerian economy, we said it's a stable Naira. I've been talking about it all along. There are some major things that we have to look at in 2023. One, the new currency comes out on Friday. No, today is 12th, right? 13, 14, 15. 15 is coming out on Thursday. The new notes come out on Thursday. They will run concurrently till January 31st. Then there'll be a new limit. The cashless policy becomes nationwide as from the 1st of January. Okay, Sunday, the 1st of January. So right now, it's only 6 states that are affected by that. So there'll be one MPC meeting next month. Conventional logic says that no move, but even if there's a move, it's going to be mild, maybe 50 basis points. Okay, how will that affect but we've seen in the last 10 days that the treasury bill rates have started coming down, which is a signal to the market that the federal government and the central bank and the debt management office has got to the point where they don't want to increase interest rates anymore. So from an investor perspective, and once the market saw that, we've seen in the last 4 or 5 days, interest rates, we've seen the stock market appreciate in Nigeria, maybe as in response to that. So because if interest rates drop, price of financial assets increase. So we've talked about real GDP growth, the sectors that are consistent with the global sectors, which I've talked about. Yeah, telcos. So should you be buying Airtel and MTN? Yes, because they have 5G. They are the ones that are doing everything. Should you be buying infrastructure of telcos, main one, IHS, and others? Yes, because without that, 213 million people scattered around the world, around the country, you need this. So we like MTN. First 2 months of the launch of 5G, they grew their subscribers by 4.2 million subscribers. Momo, Smart Cash, all of these things, they are changing with their POS and all their trader agents all over the country. They are changing the financial services landscape. But their gain will be the loss of the banks. And therefore, yes, the banks will still settle the transactions, but the banks' margins are going to be squeezed. Manufacturing is broken into heavy manufacturing, intermediate manufacturing, and light manufacturing. Then the FMCGs, this area, you need to produce here. They have confronted with 1, no foreign exchange; 2, high finance charges; 3, logistics disruption; and 4, question of storage and power. So, but now for power, they have the gas turbine generators. For foreign exchange, they're buying in the parallel market and pricing their goods accordingly. For distribution and disruption, I think the construction of all major roads in the country is going to affect, going to make their business more productive. And so we think that manufacturing will help, and the investment in the telecoms and IT area will also help. That's okay. Real estate and construction, yes. Economies of scale. Economies of scale are making the price of cement not increase as fast as other commodities. So we have cement, iron rods, sand, and all those things. So, and again, there's civil works, construction, and affordable housing. So there's real estate, which is a house and a house. There's affordable housing, which is the estates. Then there's civil construction, which is bridges, roads, and then the other things. Agriculture, great sector, we like it. There's animal husbandry, there's crop production, there's horticulture, there's aquaculture, and there's cash crop production. So all of these areas, and then there's storage, there's processing, food processing, agri processing, there's the payment system, and there's the hub system of bringing all the raw materials to a central point where people come in. So rather than you're sending one truck to Ewu, the other truck to Auchi, another truck to Ifon, and all those people bring all their goods to one main center in Benin or somewhere. And from Benin, people come and buy, people from Asaba, people from everywhere will come and buy from Benin. And so the depot, the hub for commodities trade, like you have in Jos, you have in Kaduna, you have in Benin City, you have in probably it used to be probably, I'm not sure, maybe Onewe or somewhere where everything is centered and everybody will buy from there. So transport, yes, transport is a major sector. People have to move, goods have to move, and where there's no infrastructure. So what are we seeing here? We are seeing some investment in rail, but not limited linkages. So again, road and marine. So one would say that marine infrastructure becomes a big thing. In Lagos, this amount of money these jokers are trying to spend on the Fort Mainland Bridge, with 1/10 of it, right? We can clear the entire waterway from Badore to Mende and everywhere, and put overcrafts that will carry no less than 1 million people every morning and afternoon, evening, across everywhere efficiently, than building the concrete structure of $5 billion or $3 billion to build another bridge. Yeah, the bridges are necessary, but the first things first. Why don't we invest on the waterways immediately? Light them up, put security. The water goes all the way from Badore to Thailand to Abuja, all the way to Isolo, to the airport, to Aginigbi. This place is surrounded by water. So there are trains in Amsterdam, but everybody knows you use the water to everything. So anyway, so transportation, I believe that the marine transportation is the low-hanging fruit in Nigeria. Then, okay, so how will the government deal with these things? For you, the opportunities that you can buy government debt, the restructuring of Nigerian government debt, ways and means advances, revenue anticipation bonds, which means that the government will issue paper, and when the tax is collected, they use to pay. Consumption taxes are being thrown all over the place, but I don't know how far that will go. And then investment opportunities are there for you. So I'm not going to bore you too much with all of that. Again, this is an economy that thrives on private consumption, as you can see. Private consumption as a percentage of total GDP goes anything between 60 to 65%, and we're talking about almost $351 billion. So what does an increase in private consumption means? That the retail sector, the food sector, and agriculture, manufacturing sector, all these people will have great opportunities, and that's what drives you. What are the threats to it? Because when the economy is overheated, you have inflationary pressures. Inflation means higher interest rates to curb it. Higher interest rates mean that your value of your assets will reduce as time goes on. So generally speaking, one major issue that we are going to be talking about here is how will Nigerian Naira perform? I think that there's going to be adjustments, there are going to be changes in the way the Naira. I heard one of the candidates say that I'm going to instruct the central bank to stop having multiple exchange rates. But the law is very clear. The central bank is autonomous, the central bank is independent. And the fact that you made that comment that you will instruct the central bank to stop means that the relationship between the presidency and the central bank has been defined. So I think it was more about out of not understanding. If Mr. Biden or Mr. Trump was to say that I'm going to instruct the Federal Reserve, that same minute, the value of the dollar will fall in the market. That's it. They said, did you just hear that? Now, okay, so let's go to stock market performance. Stock market so far, remember, looking good, all green here, but there are underlying weaknesses there. Now, I've talked to you about it, that when we're talking about the sectors, I'm telling you the sector that you. So, but some sectors get better as the economy matures. Those sectors are the financial services, insurance, asset management, banking. As the economy matures and gets more integrated, then the role of the banks as financial intermediaries becomes more profound and more useful, and the linkages become stronger. Okay, so so far, our analysts say they like Airtel Africa. Airtel has just got is doing the 5G bid. I think they're the only one sole bidder. MTN already got the 5G. MTN continues to do well. It's trading at 215 naira. They did an IPO at 180 or 190. So it's been a lot of, and they've done a stock split of some sort. Okomo oil becomes really strong because all the things that are happening in the palm oil space, from the palm nuts to the palm kernel oil to the palm fruit to the roof, thatch roofs, and they use it also to make brooms, and brooms are in high demand because of this political. So after the election, the demand for brooms will stop. Flour mills, very strong company. Sugar, flour, and everything, but again, depending on foreign exchange. Guinness and Nigerian breweries will like them as well, because they've invested in a lot of capex. So I think this sounds pretty good. So where will you invest in 2023? Safe haven, gold, 15%. this is what my analysis is in. Equities, US equities 30%, Nigerian stock market 10 to 15%, real estate in Nigeria in growth areas, Yaba, Abuja, and other places, 12%. Treasury bills for now, 30, but then you move away. Bitcoin, to me, I'm not a fan of Bitcoin. Warren Buffett said Bitcoin is rat poison, so I'll put 0 there, even though my analysts are saying 3. So 2023 elections, very interesting election. I think there'll be a runoff, first time in history. Whoever wins, there'll be reforms are inevitable because Nigeria always works when we have no choice. So this country is therefore reforms are inevitable. Stock market reaction is likely to be positive. So the time to invest is now. Are there risks? Yes, there are risks that there may be no election, anything happen to any of the candidates before the election or during the election, which could be disruptive. If nothing happens to them, and litigation after election, will there be widespread protests that the elections are rigged? We don't know. Maybe some people run away with the server. You know, if on the day of the election, people take the server and run into the bush with it. So we don't know. So, you know, so there's cyber risk. I don't know. You know. So, and I'm using the word that run away with the server. You can actually disable the server from remotely, and then election there'll be no results. They'll have to resort to manual, and then so I'm not saying that anything. I'm just saying that these are risks. With the Russians, anybody who wants to disrupt Nigeria, why waste time? Why carry out the coup when you can hack the server away? Be there. You wait for the election to finish at 7 o'clock and finish everything, and then say, okay, no more election. You have to start all over again. So, well, I'm not saying don't stop thinking about it, though. I'm just saying that it's possible. So, would there be an interest rate hike? That's not going to. I don't think there's too much problem. Would blackout during the elections and all of that? Yeah, it's possible, but you are more effective if you go to the server than taking the electricity. In those days, they used to take electricity when they were counting votes at the counting center, but now, I'm sure the servers will have UPS. So in conclusion, the economy of this quarter will be driven by telcos, real estate. I don't think the economy is going to do very well in Q4. Flood effect and all of that. Money tightening would have an effect. The Naira has been all over the place. It's now trading at 750 Naira to $1. Investors are being very cautious. The budget, this budget is an outgoing budget. There'll be another budget next year after the elections and all of that. So a three-way race. The rule of runoffs says that the person with the highest votes is number one. The person with the highest number of votes in more states, the second candidate. In other words, you can be the number 2 in number of votes and you will not qualify because number 3 had won in more states than you, even though you hadn't. So if you won all your votes in Lagos and Kano, right, you will not qualify if the third person or fourth person had votes all over Delta, Yobe, Borno. So it's very interesting. And if that happens, they'll say, okay, how you can explain that to the Nigerian public that number 2 is not a race between number 1 and number 2. And even I find it difficult to understand it, but I had to take time on. So you can imagine to explain to the Nigerian public, that could be a recipe for crisis. So thank you very much, ladies and gentlemen. Yeah.
Thank you so much, sir. I know it's always so challenging to just like pack it all into 1 hour, but it's always very enlightening, and if we could, we just keep going on and on and on. So we're just going to manage to take 2 questions, right? The first one, so Tommy C was asking, in terms of the G7 putting a cap on Russian oil, how will this impact Nigerian economy in terms of our revenue, and combine that with this potential trading of oil for gold? What could be the potential impact for us?
Okay, let me answer that. The oil price cap is not a market solution to a market problem. It's war. And they say all is fair in love and war.
Mhm.
So it is war in the sense that they're saying you cannot buy oil from Russia at more than $60 a barrel. So Russia said to hell with you, who cares? People want our oil, will come and take it. Then the people try to buy it. And then the insurance company say, we will not insure the cargo if your invoice is more than $60 a barrel. And who can ship oil without insurance? All of a sudden, the people in the ship, the captain and others, will just turn in another direction and run away with $200 million worth of, or $500 million worth of oil. You will not find them anymore because there's no insurance. So I want you to imagine that to happen. So who will share pump oil into a tanker, right? Without invoicing Russia at $60 a barrel. And if Russia promised to pay them $80 a barrel, okay, fine. Then the insurance company refused to insure it. The man, you think you have $80 of oil going somewhere. The man running the ship will run away. You will have nothing. You will have no ship and no oil after. Right? And they will sell the oil to some fake refinery somewhere and disappear. All of them, you don't hear of them forever and ever again. So there are checks and balances. So what it has done essentially is to bring down the price of oil effectively. But it's not only that. You should think about the fact that Biden has allowed Venezuela to come back. They are talking to Iran, even though there's this problem about women and hijab and all that. And they've started executing people who are criticizing. They've executed 2 people already. So that could be an extreme situation, but quite intolerant, the Shiite scheme there, right? So we think that, yes, these are temporary things, but how does it affect Nigeria? Nigeria is not benefiting anyway. Price of oil has come down. Our production has gone to 1.08 million barrels. So we are still way, way below. So we are not producing enough to get the benefits. But on the other hand, the price of oil comes down. The price of the amount of subsidy actually reduces. But again, I thought the petrol queues had disappeared 2 days ago, but this morning I saw some queues are back again. So you mentioned oil for gold. Oil for gold is a Ghanaian counter trade transaction. But Ghana, when a man is pushed to the wall, you'll sell everything. That's when you can bring out your mother's jewelry to sell for food. So what is happening is that the Ghanaians didn't have cash to buy the oil, so they produce gold. Ghana is one of the world's largest gold producers, or used to be. That's why it was called Gold Coast. Not Ghana was given, that was the name at independence. Before independence, the country was known as Gold Coast. So Nigeria was known as Nigeria before. So Ghana is living up to them, but Ghana did a transaction about 10 years ago, 20 years ago, in which it sold forward its gold at a ridiculously low price. And those guys converted it. They set up a company called Ashanti Gold, which is owned mainly by South Africans and Americans. So those guys have it, and they continue to take the gold at about 1/10 the price of the global price. For Ghana use the money, and of course, like Nigeria, they wasted it and consumed it. That's the problem they have today. So, they're stuck in their own. But again, like I said, there'll be an IMF program. Ghana is a well-diversified economy. They have tourism, they have education, they have gold, they have cocoa, they have bauxite, and of course, they have oil. So,
Okay, thank you, sir.
Second and last question, please.
Yes. So in your presentation, you highlighted how Africa is contributing to increased global population growth. But you now find that Nigeria, who is the most populous African nation, has an increasing number of its young population jackpying to the Western world. What do you think, how is this going to impact our economy? And I mean, particularly as the options are many, you can jackpot to UK, to Canada, you know, in the long term, what do you think will be the effect?
Well, let me put it this way. I look at it from a different perspective. Labor and skills will go to where you will have one. Well, I think they call it the marginal revenue or something, MRP, I don't know what it stands for. So labor moves in that direction, where they will get the greatest utilization, where the economic impact and value add is most, where the optimality of the resource is used. Now, again, static analysis will work based on today, this is where it is, so they're all jackpotting. What they do not know is that if there's a reform agenda in Nigeria, and it changes the marginal MRP, which means that all of a sudden you find yourself trying to run back, or you've lost the opportunity. Because all it takes is 3 months of reform-oriented policies, and investors begin to come in here, right? And therefore, why? So you see, the world is made of 3 distinct groups: those that make things happen, those that watch things happen, and those that hear that things have happened. So the jackpotting people, those who have heard that things happen, 90% of them have heard that things happen, so they run away, run there and find out. So I have no qualms about that. But if you went out as an entrepreneur, you also have to leave to come back, and your ability to respond and jump back is not as rapid as you may think. So after the election, February 25th is not far away. The moment people now know that there's a clarity as to what the economic policy is, investors begin to take positions. These same people will coming back to where they started, hopefully with some skills, hopefully with some opportunity, hopefully. So I wouldn't bother too much. And what percent of our population are those? How many are there? Right? So yes, they are the best minds, or I would say the professional minds. And why are they going there? They're not going there necessarily because of reward only. The fact that if they have children, have family and all that, it's okay. I need to pay the school fees of my children. I need to get them quality education. I need the health. So some of them are doing menial functions, but they're doing it because they want to relocate for that reason. So if the policies change and investment opportunities come and the government become more responsible, and all these are big ifs, right? This place can be. Why are people not jackpotting from Benin Republic? Why are they not jackpotting from Ghana, Ivory Coast into those countries?
At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy.
Congratulations, dear.
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha Morgan, growing your wealth.